Hello, it's Robert Miner with Dynamic Traders Group with our brief video for YouTube subscribers and Twitter followers. We're going to take a look at 2 or 3 markets that might have immediate trade setups in the week to come and identify the conditions that'll indicate if indeed they're good trade setups, as well as we're going to review one that I went over in detail last week and show you why it's so important once a market meets all the conditions for a trade setup that then the market's got to trigger into that trade. We'll show you one of those triggers in just a moment. So if you like what you learned today, you can apply it to any market in any time frame. Check out our DT reports at dynamictraders.com. You can get a 1-month trial for first-time subscribers from just $19 a week. So if you're interested in on what I'm teaching you here, you might check that out. Pretty inexpensive to test us out for a month. Oh, and I just want to mention before we get started is that I actually trade, unlike most of the so-called advisors and people make a lot of big noise, whether it's Instagram or Twitter or YouTube or whatever. I actually trade successfully. This is just through Thursday, the 13th. Well, maybe that was Wednesday. But in this Robbins Global Derivatives Trading Championship, and this is a real money trading. I'm up 155.6%. So again, when I teach trading strategies, I'm teaching them from the real world of actual successful trading. Okay, let's get started. I'm going to take a look at the gold market. We featured it last week. Frequently, I feature the gold market in our trade strategies because I've been trading it for 35 years. It's one of my favorite markets. But here we were as of the weekly. This is the weekly chart. But it doesn't have this past week's date on it. So a week ago, we're looking at this chart. Looked like some sort of consolidation was going on. It was what we call a double inside week, where we had inside week and then inside the inside week. But the key last week was the weekly momentums were bearish, and they hadn't reached the oversold zone. So the assumption was the breakout was going to be down. So we wanted to be oriented towards identifying setups for short trades for a continuation of the bear trend. So the trade strategy, and I want to emphasize strategy. We don't forecast. We identify conditions with a high probability outcome and acceptable capital exposure. And then once we've identified those conditions, we identify a specific entry with a specific protective sell stop. So in this case, we did have a daily momentum bear reversal that was made early in the week. And so once the bear reversal is made, then we look at the market and we enter on a lower close. Enter at the end of the day a lower close. That confirms the reversal. Had the reversal, and boy, the next 4 days, we just closed up and up and up. So we never had the setup and the specific trigger to get into the trade. And now we've continued and made a new closing high above the swing closing high. Things have changed in the last week. And remember, we're not forecasting. We identify conditions based on the type of technical analysis that we do for a trade strategy. Let's go back to our daily data, put this past week on. What happened? Well, the weekly momentum made a bull reversal this week, and it closed above this double inside week. Indicating that the trend is reversed to bullish. So again, we identified conditions with a high probability last week that the conditions were set up, but then the trigger was never made. So that's really, really, really important if you want to be a successful trader. That's how you trade. That's how all successful traders trade. No magic about it. It's pretty logical. Is a market in a technical position to make a reversal or to trend, confirm a trend or whatever? If it is, then identify specifically what the market can do, the specific price that you would enter at, the specific price where you'd put your protective buy or sell stop. That's what's really important, not generalized statements that, well, this market is looking strong, the market is looking weak, and I like this market if it reaches such a price, or blah blah blah. That's all irrelevant. That's all babble by people that don't actually trade. So when you actually trade, you identify specific condition, and then you identify specific trigger and a specific stop loss, and then you manage your trade in that same way. Okay, let's take a look at another market that is almost in an ideal position for a trade setup. So this is the dollar daily data, the dollar index. It's the June contract. I know most of you, if you trade currencies, you're trading the Forex currencies and probably not the futures dollar index, but it's always really good to keep on top of the dollar index itself. And it is a good trading vehicle, by the way. So if you trade the euro, the dollar index trends just about inversely, tick for tick, with the euro. I'm looking at the dollar index today because it's in a clearer technical position than the euro is. The euro is almost in as good a position, but it's the dollar index that's putting the nail in the coffin, shall we say, or the nail in the trading strategies, I guess. So here's the dollar index. The daily momentums are what we call dual look back overbought, and that's a real high probability that we're within a bar or two of completing what we call a daily high in the dollar index if it wasn't complete last Thursday. So very significant, something you want to be alert to. And why is that? We're also, Thursday was just one day off of the high probability time target to complete a daily high. But here's what's even more important. Look at this pattern over the last few weeks, about 6 weeks. This is very much a corrective kind of trading range. And that more than likely, since it comes right after an impulsive decline, which I got labeled a wave 1 or A, that when it reverses and continues down, if it closes below the last swing low where the last daily momentum bull reversal made, that would indicate a much higher time frame bear trend is underway. For the euro, it'd be a bull trend. So what I look at sometimes when there's conflicting technical data is I say, okay, I'm going to go down to a smaller time frame. In this case, the daily data. I'm going to position on a daily trend, and then if it turns out to be a higher time frame weekly trend or even a monthly trend, I'm in the market. And if the euro's looking a little sloppy, but the dollar's looking really good, then I'll key off the dollar. So here's the dollar index. The daily momentums are dual look back overbought. Potential triple top of an A, B, C, D, E flat correction. The next daily momentum bear reversal will be a setup for a short trade after we make the bear reversal and the momentum following a lower daily close. So that's going to be a fantastic setup, real high probability, real low capital exposure for a potential of the market continuing to a new low, well below these lows, well below those lows. And again, I'm not forecasting anything. I'm simply identifying what the market's got to do to make a specific trade decision. And I would actually go over and make the trade on the euro as opposed to the dollar. We'll take a quick look in the euro. Here's the euro. It's basically the same position, except the daily momentums are not oversold in the euro as they are in the dollar. And this last Thursday's low in the euro was not a low below the prior week's low where it was a higher high in the dollar. So the dollar had the cleaner pattern. They're basically in the same position, but inverted, has a better setup with the daily momentums. So when I get a trigger, a reversal in the dollar, I'll actually take the trade in the euro. So in other words, probably in the next day or two we're going to have an ideal setup in the euro on the long side for at least what I call a daily low, but that would be followed by 3 to 5 days sideways to up. And the reason I'm particularly interested in it is it's the possibility of completing basically a triple bottom here, triple top in the dollar, which would be very significant. If that's the case, we would end up trending to a new high above this late March high. So that's what I'm looking for next week. Take care.